Hey there, investors! Are you ready to make 2025 your best year ever in the stock market? Or are you going to be caught flat-footed when the market throws a curveball? We're talking serious gains, folks. But also, potential pitfalls that could leave your portfolio hurting. Don't worry, I've got you covered. As a matter of fact, do not invest in any other stock this year until you watch this video from start to finish. In this video, we're diving deep into what smart investors need to know to dominate in 2025. Before we get started, do me a quick favor and hit that like button and subscribe to the channel for more awesome investing content just like this. It really helps us grow and bring you even more valuable insights. Alright, let's get down to business. 2025 is here now and the stock market waits for no one. Now, you can't predict the future of the stock market, even with all the fancy algorithms in the world, but you can sure as heck learn from the past and understand the forces at play right now. We've been on a bit of a roller coaster ride lately, haven't we? Volatility is the name of the game, and that's unlikely to change anytime soon. Trade wars, geopolitical tensions, you name it, the market's got a whole lot to digest. But here's the thing, even with all the uncertainty, there are always opportunities for savvy investors. The key is to stay informed, stay disciplined, and stay focused on the long game. Stocks have been soaring, driven by strong earnings growth, a resilient economy, disinflation, and interest rate cuts from the Federal Reserve. For investors, 2024 was a year full of opportunities and reasons to celebrate. Looking ahead, analysts predict that many of these positive factors could carry into 2025. However, they warn that the same playbook from 2024 might not work again. Fiscal policy in particular could introduce new layers of uncertainty across U.S. markets. So, what's next for investors in this new year? Let's dive into the expected changes and explore how strategists suggest adapting to the shifting landscape. In 2024, the stock market's impressive returns were largely fueled by a few mega-cap tech giants, even as the rally began to spread across other sectors. With tech valuations now appearing overextended, analysts predict a stronger shift toward other sectors in 2025. Seth Meyer, global head of client portfolio management at Janus Henderson Investors, highlights the opportunity this creates. He stated that broadening earnings growth should result in the ability to identify more winners. The key to success over the next year is finding strong companies at relative discounts and letting them outperform. 𝗗𝗟𝗏𝗧, CIO of Morgan Stanley Investment Management's Portfolio Solutions Group, is also shifting focus away from large-cap tech. He's increasing investments in areas like mid-cap stocks and the equal-weighted S&P 500 index. We're targeting different factors for earnings and profitability, Karen explains, pointing to sectors like industrials and housing as strong candidates for earnings growth in 2025. The takeaway? Keep an eye on undervalued opportunities outside of the tech-heavy giants to capitalize on a broader market rally. Uncertainty in Washington is shaping the outlook for 2025. While the 2024 presidential election results gave stocks a significant boost, the unclear policy landscape makes it harder to predict how various assets will perform. Fiscal policy is where all the action is going to be in 2025, says 𝗗𝗟𝗏𝗧, CIO of Morgan Stanley Investment Management's Portfolio Solutions Group. It's going to be about taxes, tariffs, deficits, all of these things. President-elect Donald Trump's campaign focused on policies aimed at boosting the domestic economy, including lowering corporate taxes and imposing tariffs on foreign goods. While these measures could stimulate growth, analysts warn they may also drive inflation depending on how they're implemented. For instance, Karen notes that if tariffs are narrower in scope than anticipated, the negative impact on markets could be less severe. The key will be in the details of how these policies unfold. One of the biggest elephants in the room right now is inflation. It's a real pain in the you-know-what for investors, eating away at your returns like a pack of hungry termites. The Fed's been trying to tame this beast, but it's proving to be a tougher battle than expected, and you know what that means? It means higher interest rates are likely on the horizon, which can put a damper on economic growth and stock market enthusiasm. But don't panic just yet. Remember, even in an inflationary environment, there are sectors and companies that can thrive. Think about businesses with pricing power, those that can pass on rising costs to consumers without breaking a sweat. The Federal Reserve, or the Fed as we like to call them, they've got a tough job. They're trying to cool down inflation without sending the economy into a tailspin. It's like trying to land a jumbo jet on a postage stamp in a hurricane. They've been raising interest rates and the market's been reacting, sometimes predictably, sometimes not. The Federal Reserve's monetary policy path is much clearer heading into 2025. The biggest difference between Jan. 1, 2024 and Jan. 1, 2025 is that we now know where the Fed wants to take policy. While last year's focus was on when the Fed would cut rates, the question now is, how much? At its December meeting, the Fed delivered its final rate cut for 2024, and adjusted its 2025 outlook, reducing the expected cuts from 4 to just 2. Fed Chair Jerome Powell reaffirmed their commitment to easing rates, saying, "We see ourselves as still on track to continue to cut, despite inflationary pressures and policy uncertainties." Fewer rate cuts aren't necessarily bad news. Higher rates present unique opportunities in fixed income markets, offering price appreciation if rates fall, and attractive yields if the rates remain steady. The bottom line is that the Fed's actions will have a huge impact on the stock market. That's why it's crucial to stay informed about their decisions and understand how those decisions might affect different sectors and industries. So what's the big picture for 2025? Well, the experts are split, just like always. Some are predicting smooth sailing while others are bracing for more turbulence. Morningstar, for example, suggests that while volatility might stick around, there are reasons for optimism. They point to potential growth in areas like technology, healthcare, and renewable energy. Of course, they also emphasize that past performance is no guarantee of future results. Wise words indeed. Remember folks, nobody has a crystal ball. The key is to listen to different perspectives, do your own research, and develop a strategy that aligns with your risk tolerance and investment goals. Volatility, oh boy, it's the name of the game these days, isn't it? Up one day, down the next. It can make your head spin faster than a roulette wheel. Despite 2024's relatively smooth rally in the stock market, marked by record highs and only a few pullbacks in April, August, November, and December, 2025 is shaping up to be more turbulent. Rather than viewing these dips as a reason for concern, investors should recognize the value in buying during these pullbacks. Volatility isn't necessarily a bad thing. In fact, it can create some amazing opportunities for those who are prepared. Think of it like this. When a storm hits, some people panic and run for cover, while others grab their buckets and start collecting rainwater. The key to navigating volatility is to stay calm, stick to your investment plan, and maybe even look for chances to buy quality assets at a discount. It's like shopping at a clearance sale, except instead of clothes, you're getting a piece of great companies. Now let's talk about one of the most important concepts in investing: diversification. You know the saying, don't put all your eggs in one basket? Well, the same goes for your money, folks. If you put all your money into one stock, no matter how promising it seems, you're putting yourself at risk. What if something unexpected happens? By diversifying across different asset classes, sectors, and even geographical regions, you're spreading your risk and increasing your chances of long-term success. Think of it like building a strong house. You wouldn't just use one type of material, would you? You'd want a solid foundation, sturdy walls, and a reliable roof. Diversification is like building a strong portfolio that can weather any storm. Here's the bottom line, my friends. Investing isn't about getting rich quick. It's about building a secure and prosperous future for yourself and your loved ones. It's about having the freedom to pursue your passions, retire comfortably, and leave a legacy behind. So, as you prepare for 2025 and beyond, remember to keep the long game in mind. Don't let short-term market fluctuations derail your plans. Stay informed, stay disciplined, and never stop learning. Alright, let's get practical. How do you actually build a portfolio that's ready to rock in 2025? It's not just about picking random stocks and hoping for the best. You need a strategy, a plan that balances stability with growth and a bit of excitement. Well, think of it like a well-balanced meal. You need your proteins, your carbs, and yes, even a little bit of dessert. Each component plays a crucial role in keeping your portfolio healthy and thriving. In the investing world, your proteins are your blue-chip stocks. These are the foundational elements that provide stability and steady returns. These are the established, reliable companies with a long history of paying dividends and weathering market storms. They are the bedrock of your portfolio, offering a sense of security. Think Coca-Cola, Johnson & Johnson, those kinds of names. These companies have proven themselves over decades, if not longer, and are trusted by investors worldwide. Now, for your carbs, we're talking growth stocks. These are the companies that have the potential to grow at an above-average rate compared to other firms. These are the companies with the potential to explode in value, maybe even disrupt entire industries. They bring the excitement and the possibility of significant returns. Think tech companies, renewable energy companies, anything with that next big thing potential. These are the innovators, the game changers that could redefine the market. And finally, a little dessert, a sprinkle of speculation. This is where you add a bit of spice to your portfolio. This is where you might allocate a small portion of your portfolio to higher risk, higher reward investments. It's the thrill of the unknown, the chance to hit it big. Think emerging markets, cryptocurrencies, or even individual stocks with a compelling story. These investments are not for the faint-hearted, but can offer substantial rewards if they pay off. Remember, the exact balance of your portfolio will depend on your risk tolerance, investment goals, and how much time you have to ride out market fluctuations. It's about finding the right mix that aligns with your personal financial situation and future aspirations. So, take the time to research, plan, and build a portfolio that not only meets your needs, but also excites you about the future. Now let's talk about a strategy that can help you sleep soundly at night, even when the market's doing its best impression of a roller coaster dollar cost averaging. Here's the basic idea. Instead of trying to time the market perfectly, which is about as easy as predicting the weather 3 months in advance, you invest a fixed amount of money at regular intervals. This way, when the market dips, you're buying more shares at a lower price. And when the market soars, you're buying fewer shares at a higher price. It all averages out in the long run, helping you smooth out the bumps along the way. Think of it like filling up your gas tank. You don't wait for the absolute lowest price every time, do you? You fill up when you need to, and over time it all balances out. Listen up, investors. In the world of stocks, knowledge isn't just power, it's your secret weapon. You wouldn't walk into a boxing ring blindfolded, would you? The same goes for the market. You gotta know what you're getting into. Read financial news, follow market analysts, like yours truly, and do your own research on the companies you're interested in. And remember, critical thinking is key. Don't just blindly follow the herd. Question everything, analyze the data, and form your own informed opinions. The more you learn, the more confident you'll become, and the better equipped you'll be to make smart investment decisions. Now I know what you're thinking, this all sounds great, but I'm not a financial expert. What if I need help? Well, guess what? It's perfectly okay to ask for help. In fact, sometimes it's the smartest thing you can do. If you're feeling lost, overwhelmed, or just want a second opinion, consider reaching out to a certified financial advisor. A good advisor can help you create a personalized investment plan, choose the right investments for your goals, and navigate the complexities of the market. Just make sure you choose an advisor who's trustworthy, experienced, and has your best interests at heart. Don't be afraid to ask for referrals, check their credentials, and shop around until you find the perfect fit. Investing in the stock market is, inherently, a balancing act. It's about weighing potential rewards against inherent risks. It's about understanding that the higher the potential return, the higher the risk you might have to stomach along the way. Remember folks, there's no such thing as a guaranteed return in the stock market. If anyone tells you otherwise, they're selling you a bridge. But here's the good news. By carefully assessing your risk tolerance, diversifying your investments, and staying focused on your long-term goals, you can tilt the odds in your favor. It's all about finding that sweet spot between playing it safe and stepping outside your comfort zone just enough to potentially reap those sweet, sweet rewards. Now let's talk about those two market beasts, the bull and the bear. These two creatures symbolize the ups and downs of the stock market, representing periods of growth and decline. Understanding their behavior is crucial for any investor looking to navigate the financial landscape successfully. The bull market, that's when prices are rising, optimism is high, and everyone wants a piece of the action. It's a time of economic growth, where companies are thriving and investors are confident. The energy is palpable and the opportunities seem endless. It's like a party where the music's pumping, the drinks are flowing, and everyone's feeling good. Investors are celebrating their gains, and there's a sense of euphoria in the air. The market's momentum feeds on itself, driving prices even higher. But just like all good parties, bull markets don't last forever. Eventually the excitement fades, and reality sets in. The market can't sustain such rapid growth indefinitely, and signs of fatigue start to appear. Eventually the music stops, the lights come on, and you're left with a bit of a headache. The market corrects itself, and prices begin to fall. This transition can be jarring, especially for those who were caught up in the euphoria. That's when the bear market comes knocking. It's a period marked by declining prices, economic slowdown, and a general sense of pessimism. The once thriving market now feels like a ghost town. Bear markets are characterized by falling prices, pessimism, and a general sense of unease. Investors become fearful, and the selling pressure increases. It's a challenging time, but it's also a natural part of the market cycle. Investors get skittish, selling their holdings and retreating to the sidelines. The fear of further losses can lead to panic selling, exacerbating the decline. However, it's important to remember that bear markets, like bull markets, don't last forever. But remember, even the darkest of nights is followed by a sunrise. Bear markets eventually give way to recovery and growth. The key is to stay patient and not let fear drive your decisions. Bear markets, while challenging, create opportunities for those who are prepared to ride out the storm and even pick up some bargains along the way. Savvy investors use this time to reassess their portfolios and make strategic moves. The key is to stay calm, stick to your investment plan, and remember that market cycles are a natural part of the investing landscape. By understanding and preparing for these cycles, you can navigate the ups and downs with confidence and resilience. Alright investors, we've covered a lot of ground today. We've talked about market trends, risk management, diversification, and the importance of staying informed, but now it's time to turn knowledge into action. Here's your 2025 action plan. First, review your current portfolio. Is it aligned with your risk tolerance and investment goals? Do you need to make any adjustments? Second, start researching. Identify companies and sectors that align with your investment philosophy and have the potential for growth in the years to come. Third, develop a plan and stick to it. Whether you choose to invest a lump sum or use dollar cost averaging, consistency is key. So there you have it, folks. The roadmap to 2025 and beyond. This journey is not just about reaching a destination, it's about the experiences, the lessons, and the growth you achieve along the way. Each step you take is a step towards a brighter, more secure future. It's time to take charge of your financial future and turn those dreams of financial freedom into a reality. Start by setting clear, achievable goals. Break them down into manageable steps and celebrate each milestone you reach. This will keep you motivated and focused on your long-term vision. Remember, the stock market might have its ups and downs. It's a bit of a wild ride, no doubt about it. But don't let the volatility deter you. Instead, use it as an opportunity to learn and grow. Understand the market trends and make informed decisions that align with your financial goals. But with the right knowledge, a solid strategy, and a healthy dose of discipline, you can navigate those twists and turns and come out ahead. Educate yourself continuously, read books, attend seminars, and stay updated with the latest financial news. Knowledge is power, and it will be your greatest ally on this journey. Think about what you're working towards. Visualize your goals clearly, write them down and revisit them regularly. This will help you stay on track and remind you of the bigger picture. Picture those financial goals, big or small, that light your fire. Maybe it's retiring early, buying your dream home, or starting your own business. Whatever your aspirations, keep them at the forefront of your mind, or securing your family's future. Financial success isn't just about personal gain, it's about providing stability and opportunities for your loved ones. Imagine the joy and peace of mind that comes with knowing your family is well taken care of. Whatever it is, let those aspirations fuel your journey. Use them as a source of motivation to push through challenges and stay committed to your path. The path to financial success isn't always easy. There will be obstacles and setbacks along the way. But remember, every challenge is an opportunity to learn and grow stronger. But it's a journey worth taking. The rewards of financial independence and security are well worth the effort. Stay focused, stay determined, and keep moving forward. And remember, you don't have to go it alone. Seek out mentors, join financial communities, and surround yourself with like-minded individuals who can offer support and guidance. Seek advice when you need it, stay informed, and never stop learning. The journey to financial success is ongoing, and there's always something new to discover. Embrace the process and enjoy the ride. Hey, before you go, don't forget to hit that like button and subscribe to the channel for more awesome investing insights just like this. We're here to empower you on your journey to financial success. And remember, the most important investment you can make is in yourself. Invest in your knowledge, invest in your future, and never stop reaching for those financial dreams. Until next time, happy investing.